Hello and welcome to the Business Standards Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day.
What the world needs now is people who see flight a little bit differently. Because seeing a better connected world isn't far in the future. We're building it now. GE, building a world that works.
At a time when airports across the country are seeing a jump in the traffic, the soaring prices of fuel are threatening to skid the airline business off the runway. Oil marketing companies raised the price of aviation turbine fuel or ATF by a steep 16% on Thursday. It leaves the pandemic-ravaged airlines with no other option but to pass on some burden to flyers. It seems that the worst is not over yet for airlines and the travel and tourism industries. In today's segment, we tell how an upcoming hike in airfares, which looks imminent now, will impact these industries.
Are you planning to jet off for a vacation? You might have to shell out more from your pocket. Or are you set for a business trip? The duration of your stay might get shorter. Why, you ask? As most of us are too restless to stay put at home after a prolonged restriction on our movements during the pandemic? Here's why. SpiceJet boss Ajay Singh on Thursday warned of an increase in airfares as jet fuel prices have shot up by almost 16%. Prices of aviation turbine fuel or ATF in short have been hiked to 141,232.87 rupees per kiloliter in Delhi. Why are we telling you this specific number? Because it is an all-time high. On top of this, a weakening rupee has doubled the challenge for airlines because key cost items like fuel, maintenance, lease rentals and overhaul costs are billed in US dollars. ATF prices account for 40% of an airline's cost and these have increased by close to 55% since 1st January. Ajay Singh has said that domestic airlines have been left with little choice but to raise fares immediately, and that a minimum 10 to 15% increase is required. But there is obviously a catch. Airlines are concerned that any increase in fares could lead to a decline in passenger numbers. With two previous rounds of fare hikes, there has already been a decline in passenger numbers from 407,975 flyers on 17th April to 339,175 on 14th June. And airfares are already high because of the government-mandated fare floors, which regulate prices beyond 15 days. The impact is being felt. Indigo, the market leader, posted a loss of 1,681 crore rupees in Q4 FY22 as it took a severe hit due to the rise in jet fuel prices and higher exchange rate. The fates of the airline, travel and tourism and hospitality industries are intertwined. So, how will the upcoming fare hike affect them? Gaurav Patwari, Vice President Air at ClearTrip, told Business Standard that the impact had not been adverse for the past 2 months due to the high demand on account of the summer holiday season. But Patwari added that the impact was more prominent now as bookings were slowing down. He projects that high fares will lead to subdued demand for July, August and September, which is seasonally a weak quarter too. Patwari also believes that in the current high fares scenario, it will be very difficult for airlines to stimulate demand. ClearTrip estimates that domestic airfares have on an average risen by 30 to 40% in the past 2 to 3 months.
The demand is currently far exceeding supply, and because of which the prices are going up. Now, prices will go up further is the indication that we have, and it's going to impact demand definitely. And we are already seeing that because our anticipation of demand was far greater, right? When we were doing our numbers, when we were talking to our clients, and we deal with both the domestic leisure travel, business travel, MICE, that's meetings and conferences, and everywhere we had anticipated a far greater demand, but definitely there is a shrinkage. And with the prices going up further, we believe that there's going to be an impact in overall travel. In terms of travel, there will definitely be a 20-25% dip. Now, what's going to happen is, because the airfare has gone up and most of our travel, at least the segment that we deal with, most of that is the flying passengers, there will be a shrink in the stays, because and that's happening across the board. I mean, business traveler will find it cheaper to fly back and forth and not spend on a hotel room night, because they're spending so much on airfare, right? So it will impact demand, and similarly leisure travel, we see a significant dip. Now, our anticipation was that the domestic travel is going to be replaced by international travel. But international travel is an airfare issue, and second is a visa issue. I mean, people are not getting appointments for visa. The wait time for a visa is significant.
Inflation is really eating into whatever bit of recovery that is happening. And now with this news of the airline tickets also going up is also going to be quite a tough measure to deal with. Look, there are many destinations across the country which are driven by domestic travel and of course by international travel also. But we believe any increase is going to be more affecting the domestic travel. And this will, of course, may mean lesser travel. It also may mean falling down of revenues for the hotels. So it is a worrying situation. It is now difficult to absorb these inflationary prices. So there is going to be a price hike in our industry too, across F&B segment, across the room segment also. But now, even if traveling is also going to become expensive, then I think it is something to worry about. The increase and the escalation could be about 15 to 20%, given the fact that the fuel is a price which really governs a lot of our input costs, in terms of, because every input cost goes up because of the fuel price increase.
Meanwhile, luxury bespoke travel is back in a big way, and companies catering to the niche segment are witnessing demand that is higher than pre-COVID levels. The demand centers around exotic locations like the Arctic and Antarctica, as well as foreign cruises and domestic road trips to Lahaul and Spiti Valley and Ladakh. Another interesting format is road trips in foreign countries like Turkey, or drives that cover routes in Jordan, Morocco, Oman and Kyrgyzstan. The well-heeled customers in these cases might not be swayed by price movements. Apparently, it will be a tough time for the budget traveler. But a hike in airfares alone may not have an adverse effect on the tourism and hospitality sector. However, it is worth asking, could that change if such hikes coincide with an increase in prices across the hospitality sector too?
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं? ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं? वो तो सबसे आसान है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Markets too are passing through turbulent weather, and stocks are falling like ninepins. So, with the US Fed and RBI making their priorities clear, how should investors approach the markets? How is market veteran Shankar Sharma, founder First Global, tackling ongoing headwinds? Business Standard's Puneet Wadhwa caught up with him to understand his interpretation of the recent developments, and find out his investment strategy.
Hello, Shankar, and welcome.
Hi, Puneet.
So, a little birdie tells me that Mohammed Rafi is one of your favorite playback singers. And one of his songs is "Ae Dil Hai Mushkil Jeena Yahan, Zara Hat Ke, Zara Bach Ke Ye Hai Bombay Meri Jaan." Do you think that quite sums up the market mood right now as well? A bit nervous, a bit cautious?
Yeah, it's not just Bombay. ये जीना मुश्किल है पूरी दुनिया में ही फिलहाल तो. So why blame just Bombay for this? But yeah, it's been a very difficult year so far, and and very, very few people would have escaped this particular carnage. I mean, it's almost impossible to not get hurt in such a situation. It's only that you have to thank your stars if you escape with little less damage and injuries and scars than most of the people on the street.
Somewhere, do you think this investor confidence has also been shaken, in this carnage? And it'll be a long time before it actually mends?
So, first of all, we don't know whether it's over or not. Okay, to be absolutely clear, I'm talking more on a global basis. Individual markets might display different trajectories. But on a global basis, there is no evidence so far that this is going to be a quick and short bear market. Okay, it doesn't look like that. I mean, there will be occasional very strong rallies, and I'm sure we are due for one because markets have fallen in a straight line. And usually when that happens, you set yourself for a counter trend rally, which can happen because of a number of factors, including, in my view, the most likely reason for a rally that I think looks likely is that crude might fall by $5-10 because it has now hit a fairly high level and it's probably going to take a breather. And then the talk will start that inflation is now under control and prices of commodities have cooled off and rate hikes may not be so strong and as brutal as expected. And those are the things that trigger bear market rallies. But I'm not so sure that this thing on a global macro basis is going to resolve itself very, very quickly.
But is the nervousness overdone? I mean, the fall from the top is, it's nothing that the markets and investors have not seen earlier. So why this panic this time around?
I don't think any of the investors around, in large part of the 6 crore demat accounts, I don't think 5.5 crore demat account holders have seen anything like it. That is virtually 90% of the market has not seen, in terms of at least numerical 90%. They have not seen anything like this. So they walked into the market out of luck more than anything else at the right time. And then the next 2 years were decent. And that led people to believe that, they had figured it out, they cracked the code and markets are not as difficult as what people have believed it to be. And they will not have gone through anything like this. And therefore, there is going to be a lot of pain out there. And
so where do you see the maximum pain coming in terms of sectors right now and let's say 3 or 6 months down the line?
I think banking remains my favorite area of pain, without doubt, because in this kind of rising interest rate, rising inflation, squeeze on household wallets, squeeze on discretionary spending, all of those things are not good for bank lending or if you try to build an aggressive lending strategy in this kind of macroeconomic situation, you're actually going to create problems for your balance sheet a year or 2 years down the road.
So where do you find comfort at the current levels?
I find a lot of comfort in a lot of small companies. I think they will ride out this wave better than large companies will. My view has been that the Nifty is not going, 70% of the Nifty is not going anywhere for the next foreseeable future. I do not think that 70, maybe 65, maybe 75% of the Nifty is going to give you a 15% compounding. So, which basically means that a Nifty returns may well have been, the best returns may well be behind us for at least the next 12 months. And therefore, what confronts you is a market that can flatline and fall rather than give you a 15-20% upside on the headline Nifty. But I think in the small cap space, I find a lot of very, very interesting little companies. And I think if you work hard, you are going to get a fair degree of winners out of those.
Is there any silver lining amid all this gloom and doom? And how are you approaching, as the markets as a fund manager, buying selectively or remaining a fence sitter?
No, you can buy. I mean, this is a great time to look for good buys, but in a bull market, you can be indiscriminate. You may not need to exercise so much, research and thinking and debate. You can simply go out and buy stuff and you will make money. And that's exactly what we saw from March 2020 when almost everything we bought went up. But with the exception of, a few of the FMCG and the old line favorite consumer stocks and the banks. But if you avoided those, you were generally quite, in a fairly good shape. But today's market will is compelling us to work very, very hard at identifying companies. So it's a great time to be putting in a lot of work, meeting companies, understanding their commentaries, understanding their numbers, and finding 10, 15, 20 good stocks, which I think everybody can.
Thank you, Shankar, for your time today. We hope to catch up with you soon again.
Sure. Thank you, Puneet. Thank you for having me.
यार
मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Meanwhile, the benchmark S&P BSE Sensex and the Nifty 50 indices hit 52-week lows on Thursday as economists feared a recession could be around the corner for the United States. And even though the US Fed raised its key rate by 75 basis points to curb inflation, markets watchers see more pain ahead for the US and Indian markets.
Thursday's steep sell-off from morning highs reflect the bearish undertone in the Indian equity markets. Despite a rate hike on anticipated lines by the US Federal Reserve, investors sold rallies and pushed the benchmark indices to fresh 52-week lows intraday. While the S&P BSE Sensex slumped nearly 1,050 points, the Nifty 50 index dropped 332 points to end at 51,496 and 15,361 respectively. With this, the 50-pack index has broken its crucial near-term support of 15,500 and could be heading towards its next support level of 14,911, which is followed by 13,099.
Support levels now, because 15,700 was a very important support and has broken it very convincingly now. So it is, I think, going to be quite brutal, it looks like to me. Short term, actually, technically, if you really see after this 15,700 support, the next support is almost more than 1,000 points away. So therefore, if there is some sort of sustained selling, I don't think there are very significant supports below 1,000 point fall. So it can't be, unless it bounces back maybe today, tomorrow or something. That is 15,700 is probably not convincingly broken. Then it's a different call. But otherwise, I think one needs to brace for a reasonably big fall.
According to analysts, the Federal Reserve's biggest increase in interest rates since 1994 and signs of weaker consumer spending indicate that inflation is winning the battle. Further, they fear that the world's biggest economy could be hit by a recession as early as 2023. The Fed on Wednesday too cut its economic growth outlook for 2022 to 1.7% from 2.8% projected in March. According to the latest estimates by Bloomberg Economics, a downturn by the start of 2024, barely on the radar just a few months ago, is now close to a 3 in 4 probability. Against this backdrop, analysts feel the US Federal Reserve's policy action on Wednesday fell short on liquidity tightening.
Now the Fed rate is, the targeted rate is around 350 basis points based on the global analyst expectation, ultimate cumulative hike of rate. So now 175 is done. So we have crossed the mid part, and with another 1 or 2 hike, the global markets would have discounted the Fed rate hike. But then other problem is the balance sheet reduction. So we have not, anywhere near the mid part of balance sheet reduction target of US Fed. So I believe there is a possibility of US market correcting. So in a nutshell, what I'm trying to say is that, while fairly enough is done on the rate hike, not much is done on the balance sheet reduction. So therefore, this uncertainty and volatility with the downward bias would continue for US market as well, therefore for Indian market.
Apart from these imported headwinds, India is facing domestic concerns such as boiling oil prices, higher inflation, weaker currency, and FPI outflows.
But the point now is that in India, the WPI and all is really out of control. So therefore, the real interest rates are hugely negative in India. So therefore, in India, the interest rate hike has to be probably much faster than what is initially anticipated. So I think therefore the correction would be there to a very substantial extent, it looks like to me.
Going forward, analysts at UBS suggest Indian investors trade with caution as it expects the Indian rupee to weaken to 80 against the US dollar, with risk skewed to the upside. That apart, it also sees yield on the 10-year government bond topping the 8% mark before the end of the current fiscal. Further, the brokerage expects DII inflows to moderate in addition to sustained FPI selling. Lastly, UBS expects the RBI to raise repo rates to 6.25% by March 2023. Clearly, a high inflationary environment for an extended period is blowing up market returns as fears of recession loom large over the US economy, coupled with concerns over a slowdown elsewhere in the world.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Apart from private firms listed at stock exchanges, there is another set of companies which are formed for charitable purposes only. Both of them have at least 2 shareholders and 2 directors, but their objectives are completely opposite. While a private listed company is formed for profit, a company formed under Section 8, erstwhile Section 25 of the Companies Act 1956, are for charity purpose only. Let us find out more about the latter. Before we delve deeper into the specifics of the Section 8 of the Companies Act, let us first skim through the case which brought it into the news. Congress Chief Sonia Gandhi and Party MP Rahul Gandhi were recently summoned by the Enforcement Directorate for questioning in a case of a money laundering registered against them. Sonia could not appear as she was admitted to Delhi's Gangaram Hospital due to COVID-19 complications, but Rahul did. So, what is the case? In 1938, Jawaharlal Nehru had founded a newspaper called National Herald, which went on to become a prominent voice against British rule. Its publishing company, Associated Journals Limited or AJL, also used to take out Hindi paper Navjeevan and Urdu daily Qawmi Awaz. But over the years, it lost steam, and about 70 years later, in 2008, AJL stopped publishing the papers due to continued losses. Meanwhile, to save the paper, Congress had given interest-free loans to AJL, reportedly from the party funds. By 2008, AJL, which had about 1,000 shareholders, owed about 90 crore rupees to Congress. It was then that AJL stocks were transferred to Young India or YIL, a private charitable company formed by Gandhis in 2010 under Section 25 of the Companies Act. In 2013, BJP MP Subramaniam Swamy filed a complaint alleging corruption. He asked how AJL, which had assets worth 2,000 crore rupees in prime locations, can be bought for just 50 lakh rupees. Congress rejected the charges. It said that YIL was a not-for-profit company and no profit or dividend can be doled out to its shareholders or directors. The party also insisted that AJL continues to be the owner of National Herald and there is no transfer of property. So, what is Section 8 of Companies Act and why firms are floated under this provision? If a company is being floated to promote social welfare, it can either get itself registered as a trust under the Trust Act 1882 or the Societies Registration Act 1860. Or it can choose to register itself as a not-for-profit organization under Section 8 of the Companies Act 2013, previously under Section 25 of the Companies Act 1956. A company is registered as a not-profit organization or NPO under the Section 8 to promote education, charity, religion, arts, commerce, environment, sports, science, research and social welfare. And the profit earned by the organization cannot be used for paying out dividends to its members. It can only be used to promote the purpose it has been set up for. The license for such companies is issued by the central government, while the authorization for the trust is given by state governments, and these companies can get the tax benefits if it gets registration under Section 80G and 12AA of the IT Act. Some examples of Section 8 companies are Azim Premji Foundation, Reliance Foundation, Reliance Research Institute, Coca-Cola India Foundation, and Amazon Academic Foundation.
I will achieve, I will fly high, in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
According to experts, foreign donors prefer Section 8 companies over trust due to more transparency and disclosures. That is all for today. We will be back with more news and analysis on our next episode. Stay tuned and thank you for watching. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.